So thank you all for joining. My name's Cody Ballas-Norton. I'm the COO of 4WARD. If you're on the platform, you found us, you kind of get and understand what it is, but 4WARD is a local to global community where we're looking to connect all the climate builders and doers. So those are individuals that are all stakeholders. So we look from academics and researchers to entrepreneurs, people looking to do a career shift. As you see today, we're going to be focusing on investors, specifically North America. And I want to thank Max, Geordan, and Blair for coming today. But it goes beyond investors. We need the corporates as well. We need the policymakers and governments and everyone in between that help us, like the experts and service providers. So we're all here together. If you haven't already been on our new members call, we have one tomorrow. It is going to be at 4 p.m. Central European time. So that's 6 hours ahead of the East Coast. So I look forward. I'll be the one that's going to be on the call, and I'll give you a rundown on what the platform is. But today, we're going to be focusing on VCs specifically. So again, I want to thank Max, Geordan, and Blair for joining us today. Max, I'd love you to introduce yourself, kind of talk a little bit about your investment strategy briefly, and everything that Remarkable Ventures is up to. And so in 4 minutes, the floor is yours.
Awesome. Thank you, Cody, and everyone for joining. I can't see faces, but I am excited to be here with everyone. So a quick introduction. I'm Max. I'm part of the investment team here at Remarkable Ventures. We're an early stage climate fund based here in New York City. I was to tell folks kind of two sides to our fund. We have ERA and Remarkable Ventures. ERA is our early stage pre-seed accelerator. General by practice is one of our core focus areas within climate tech, as well as Remarkable Ventures. It's our first inaugural called Climate Designated Fund, primarily seed and Series A, opportunistically pre-seed as well. We can lead, co-lead, co-invest. Investment size can range anywhere from $500K all the way to $3 to $5 million if we're leading or co-leading. And for us, we've made 5 investments out of the fund to date. We're finishing the fundraise at the end of Q1, so I'm excited there. Primarily target North America, opportunistically look into Europe as well as Japan. And for us, the thesis around decarbonizing the enterprise. So for us, it's around energy transition, supply chain logistics, future work, manufacturing, call it climate software, climate fintech. Those are kind of the main areas that we look to target and kind of work with entrepreneurs. So, given our kind of flexible mandate, we're not targeted to, one level position where there's leading or co-leading, but we should be flexible across the mandate there as well. So yeah, a little bit about us. We're 5 investments in and actively deploying out of our fund to date.
And I definitely want to come back kind of about a little more guidance with entrepreneurs because you see them at multiple stages. Geordan with Renewal Funds.
Great. Yeah. So my name's Geordan. Spelling my parents' pick for my name doesn't.
Sorry about that. Yeah, I keep
anybody any favors. Yeah. We're based in Vancouver, BC. Renewal Funds is a Series A, generally lead investor in early stage climate technology businesses. We have $270 million under management across 4 funds and have deployed across a wide array of themes. So our firm started with a real sustainable consumer focus. As we've grown and raised subsequent funds, we've really dialed in on enterprise technologies with a sub-focus on companies selling into government utilities. And this has been a really great niche for us because there's not been traditionally a lot of venture activity for companies that are starting out trying to sell enterprise software technologies into long sales cycle customers. And we felt that that's the exact type of customer you need to be targeting for the energy transition more broadly, as well as sustainability and climate initiatives. We deploy across the energy transition as a big theme, sustainable transportation, zero waste and circularity. Food systems has continued to be an important theme for us. And then resource conservation, sustainability, and biodiversity are other areas where we're very active. I spend most of my time on our grid tech and transportation sub-themes, and we've invested in a range of areas within the energy transition. So software selling into utilities to help optimize transmission and distribution. We were an early investor with EIP and Opus One Solutions, which was acquired by General Electric. We are a big theme for us right now is residential electrification and helping to drive down customer acquisition costs in that area. So a little bit about us: we are generally a $2 to $6 million initial check.
Geordan, sorry about that again.
Oh, good.
Yeah. Blair Simpson is with Denver Angels.
Yes, good to be with you all today. Let's see, I'm principal at Denver Angels, recently joined the team there. Denver Angels, we have an investor syndicate, which focuses on Series A and beyond stage companies. And we also have a dedicated pre-seed fund. So syndicate side, we're looking at Series A and beyond companies, pre-seed fund, smaller check size for those. We are industry agnostic, but I lead our climate sustainability practice there, focused on the energy transition. Prior to joining Denver Angels, I served as principal at Frontier Venture Capital, which focused on B2B technology companies, and I led our climate practice there as well, focusing on companies doing methane emissions monitoring, digitizing industrial manufacturing sectors, energy efficiency, commercial refrigeration, business intelligence tools and software for the energy sector. So wherever we can drive an energy transition, more sustainability within that sector more broadly, that's where I've been focused. Denver Angels, as fate would have it, based in Denver, investing all across the US, typically $1 to $2 million checks at that syndicate stage and $250K checks for the pre-seed. Usually looking for companies doing some amount of commercial traction or technologies ready for commercialization. Keeps us pretty busy.
Awesome. Thanks, Blair. Maybe we'll go back kind of the beginning and Max. And we'll hop in this way just to create kind of a narrative of Max and then maybe Blair and then Geordan. But Max, you kind of talked about how you're doing the pre-seed and the accelerator. So maybe if you could share a little bit more about that model, because then Blair is already seeing sales and revenue. So the pre-seed seed, we obviously know, especially with hardware, it can be a little bit more challenging to get to that sales and B2B side. And that scalability can take a longer time. So I'd love to hear kind of, Max, the work that you're doing to help promote that and get that early stage. Because then I know you also said that you go into Series A. So what does it look like in the beginning, and what advice do you have for entrepreneurs in that initial journey?
Yeah, no, definitely. I appreciate the questions. It's so look, at the earliest stages, there's one thing that's certain, and there will be pivots along the way. It's definitely one thing we've learned over the years. So I'd say, from our side, we're always kind of encouraging founders to kind of do customer discovery. I think your customers will tell you a lot about the direction you're selling into and kind of where the focus area you're going after. So from our accelerator kind of like pre-seed side, it's everything from customer discovery, running the pitch, selling your first customer, landing your first pilot, really fostering that relationship, because the momentum that comes into there, like that will feed into fundraising, but like ultimately starting to build the business and kind of figure out where the demand actually is. I think people sometimes have like preconceived notions of like, hey, this is what I'm going to build towards. But actually, when they start working with customers and seeing actually the real pain points and even some of the sales cycles, like how long these can actually be, like building those relationships, kind of helping kind of unlock, whether it's a first-time founder or a multi-time founder, actually break into that ecosystem is an area we spend a lot of time and effort on our side.
Max, I'm just going to jump in with a question, because this is one of the things we debate all the time as a Series A investor is, it feels like there's a lot of seed companies that are so focused on their kind of better mousetrap, they don't really pay attention to go-to-market. And it sounds like you all are thinking about the go-to-market, right from the very beginning. And I guess how do you weight those two things in terms of like tech and IP differentiation versus a really good go-to-market strategy so early? Because it's way easier for us when a company's into revenue and we can kind of look at their go-to-market metrics. But obviously pre-seed, none of that really exists differently.
Yeah, no, I think it's like it's a great question. And for us, it's one of the things that's like top of mind, right? It's like deep conviction. Like, do they come from the industry? Do they have experience selling to those customers? Do they like have a unique insight that's like, hey, this is actually how we need to go to market, who we need to sell into, like how, like you saw in the utility, these can be like 12-month sales cycles. Are people aware of that? Like, how, what does that mean for the business in terms of their own runway? So, for us, we're trying to help build those relationships and start them early, whether it's like connecting with CVCs, working with our own LPs, working with other funds like yourself to kind of get the feedback and kind of have the shared lessons of like, hey, here's what, it was nice that we had kind of the general side as well that kind of seen across industries. And while it's not always one for one, I think there are kind of stories throughout cycles of basically helping people kind of reach that scale and sort of actually get into market as well. So it's an area, I don't think there's a necessarily perfect answer on the go-to-market, but it's something we're always kind of refining, kind of working with folks with, because at the end of the day, it's critical to business to have dollars coming in and to actually kind of starting to sign contracts or moving towards paid pilots as well.
You touched on one thing though, that just founders being realistic about what's possible in their industry. Like there's so much naivety, I guess, just in terms of how hard some of these climate go-to-markets are. And so for the founders that are have maybe done it before, or at least have been counseled well by their early stage investors, or even their customers, that look, you are trying to build something that is going to take 3 years to get to scale, and you have to work backwards from that in terms of how quickly you invest in scaling up your team, all of the things downstream from that. Because if you're assuming something's going to be an 8-month sale, that's you're actually doing a front of the meter storage project or something like that, and it just takes 3 years because of interconnection or whatever. There's a lot of companies running out of money right now just because they were not realistic about how long it was going to take them to actually get stuff installed.
Yeah, absolutely. I think people were kind of taking the general software mentality, thinking hey, we can raise $2-3 million, be in market in 6 months, start to show some upsell and kind of net dollar retention on that. And I think the story's definitely played out a little bit differently. Hey, it takes time to build the relationship. I guess find the right POC, get the internal champion, get them over the line, and then hopefully the budget aligns with that same cycle as well.
Absolutely. At the earliest stages, I think having some sort of strategic relationship or strategic investment accelerator, some kind of program tied into one of these large incumbents or corporate partners, really helpful for getting you, behind the curtain and to see what really goes on, get those partnerships, get a little, sandbox action to pilots, whatever it may be. And there's usually some sort of non-dilutive grant funding. If there's real technical risk going on here, I think having a blended capital stack of not just pure venture dollars is often necessary just for de-risking the technology development cycle. It does take longer. And as was pointed out, we're in a milestone-based funding environment. So if entrepreneurs are thinking about raising capital, it is what unlocks not just this round of capital, but the next. Got to work backwards from that inflection point. Okay, how do we get there with the most efficient way possible, with the right dollars, with the right partners? Less about, I want to raise this amount of capital because that'll give me 18 months to figure something out. More about what are the goals we're trying to achieve with this funding. My 2 cents there.
Yeah, I completely agree. It's for us. It's hey, where's this take the company? What's proven, what's still unproven. But it's, we've definitely seen this in the environment. Some of the later stage investors, or the bar, I would say, is always shifting, unfortunately. But it's shifting. Hey, more momentum, more traction, more proof points, rather than hey, what looks like a Series A today, it looked very different in 2021 and 2022, and kind of in that period of time as well.
Yeah, one of you said choosing your proof of concept partner wisely, and that is such a good critical point, because I think there's just in the world of startups needing to pivot all the time, we have certainly seen many companies winning a proof of concept that it's a customer in the door, great, we're chasing it, we're going to close it, and it turns out for raising your next round, it actually doesn't de-risk anything for an investor trying to bring in that next check, because it's not the proof of concept partner that you chose isn't actually representative of where your end market is, or they've taken your product roadmap in a slightly different direction. And it's super hard at the seed stage for entrepreneurs to say no, when you have somebody that's willing to try your technology or deploy it, but sometimes I think entrepreneurs would be well served by really thinking through, is this the proof of concept that we want? Because for an early stage climate company, it's probably a $750,000 minimum investment to, really support a proof of concept to be successful. And that could be 25% of your pre-seed round. Like you only have a few shots on goal, I think, as a founder.
Real quick, so again, we're doing a series here where we're focusing on the different continents. North America, one of them. We're going to be doing LATAM, Asia, Oceania. So from your perspectives, what are the areas that North America is kind of leading in terms of being specific in terms of climate tech, and then also sustainability tech solutions? And then, like a follow-up also, what do you view as kind of more hyped areas or overhyped, and then what are underappreciated? And I'll field this to all of you.
I can start. I think in my overhyped category, I've got data center load growth. And I will take that position just on account of the fact that global, yes, it's a huge issue in North America right now. And obviously, Microsoft spinning up a nuclear plant to solve their data center load growth problem is a huge development. But I think globally, if you look at load growth forecasts, data centers are, something like 6 to 7% of incremental load growth. Transportation electrification, heating electrification, industrial electrification. These are huge categories of load growth. And so I think the problem is less, the number in aggregate and more that you've got these very localized issues, particularly in the US around interconnection queues, and transmission and distribution stress, and just the inability to service that from centralized generation. And so you're seeing lots of like co-location deals going through, some getting passed, some getting shut down, like the one on Friday. But I think in my opinion, I think the issue itself is probably overhyped, and it's probably something that's quite solvable. And it will be one of those things, just like everybody talking about COVID-related supply constraints, that is in the rearview mirror within 2 to 3 years, based on how quickly places like California and Texas are bringing online storage, whether it's front of meter or behind a meter, DR growth, which will offset a lot of this. So I think it's going to be solved, and there's pretty interesting permitting reform legislation coming through. So I don't know. That's one that I have in my overhyped. And then underhyped, I think there's been so many negative articles around EV sales, and actual headlines saying that EV sales have gone down, when actually it's just been this steady increase in EV adoption. And yes, the growth rate has slowed down relative to 2 years ago, but this is still very steady growth. And I think what's being underhyped right now is just how seriously the legacy OEMs are investing behind this, despite all of the headlines. So one of our companies, Electrum, they are the home installation partner for many of the large auto OEMs. So if you buy a EV, you get a charger installed, and our company Electrum will do a lot of the installation work. They outsource that to a network of contractors nationwide. But they are working with a lot of these legacy OEMs that are playing catch up to Tesla. But when these OEMs, because they're at such scale, flip the switch, Hyundai just turned on their Georgia plant last month, which will produce something like 360,000 BEVs every year. The sales growth and the unit economics behind these vehicles, with or without the tax credit, regardless of what happens in the election, this is a very substantial seismic shift in the auto sales market, and the scale is really phenomenal. Honda has went from being nowhere in EVs in March to like the second or third top selling non-Tesla auto OEM in the electrification space in October. So that's an area that we're very, very bullish on EV sales growth, and that it's going to continue. And yes, as the market matures, the growth rate will not be what it was in 2022, but it's still a super exciting area.
Well said, Jordan. You know your stuff. Got the data at your fingertips. I love it. When I think about overhyped, I think I don't know if it's overhyped, but hydrogen as a category, I think the adoption cycle for that is going to be very, very long. And the amount of dollars flowing into it today is quite ahead of demand or the infrastructure that's in place to distribute these solutions at scale. So I see a great deal of investment in hydrogen projects and technologies across stages. And I think it's just well ahead of demand, and being price competitive, cost competitive, it feels like we're at least a decade out from that, coming to market in a meaningful way. So yeah, I don't know if it's overhyped, but I think there's more dollars flowing into that sector than it can actually sustain, which will put it in a challenged position, in the near term. Underhyped, gosh, I think the media take on EV adoption dropping and EVs not getting a foothold. No, I don't buy that. Here in Colorado, everywhere I look, it's another Rivian driving down the street. So pretty cool to see.
Awesome. I'll jump and follow on that. I think I'll try to pick a different category. So I think, while we're not deep tech investors, one category we've looked at and tried to, wrap my head around is on the DAX side. And so I believe this is a category that will be important. I think, from a venture perspective, sometimes it's underestimated how capital intensive these businesses typically are. I think, we were talked a little bit before, but sometimes like, grant funding all the way to early stage venture, to call it your first, project finance, to your growth equity, to your late stage private equity players. I think from a capital stack perspective, these businesses become very complex very quickly. And I think the time horizons are, a little bit further out than we may have liked to hope. So I think, overhyped in the sense that I think it's captured a lot of headlines and, in terms of people of excitement, but in terms of actual practicality and feasibility in the near term, there might be folks doing it out there, but I think it definitely got a little bit more momentum than risk we're willing to take at this moment. On the underhyped category, the EV side is interesting, right? I think you have a lot of these folks that so I'll try to not use that as my answer. I think you saw a lot of the some of the SPACs that came that took off and fell quite off the thing. So I think you have some folks doing on the commercial side, which is pretty exciting, like Rivian. But I'm actually taking a different one for underhype. I think actually more on the kind of commercial battery. So I think folks starting actually both do the resi side all the way to kind of commercial, and basically scale with those. I think that's an area that we're quite excited about. We made investment in the space, a company called Taurus out of Utah, and basically batteries are able to scale from the resi to commercial to utility. If the data centers become more popular, or these kind of commercial kind of factories, kind of suppliers need more electric power and kind of grid stability, we think this is a category that both the government will help fund, as well as kind of companies succeeding, assuming the economics will work out long term.
Totally agree with you on that. I think there was kind of first wave of the behind the meter storage companies like Advanced Microgrid Solutions and stuff. That stuff, just didn't work. It was too early. And then I think as a result, there's been a reasonable amount of kind of souring on that space. But I think this is, again, just getting back to kind of long tail adoption curves. The prices are starting to get there in terms of actual raw module prices. One of the themes that we've been thinking a lot about and trying to find our niche and angle for an investment is just around EV battery reuse, because there's this massive volume of batteries that are still going to have 85-90% capacity that would be perfect for co-location with the data center behind the meter, and those types of applications. And so I think I totally agree with you. There's going to be a big wave of C&I adoption of these storage, and it applies across battery types too. I think the kind of thermal battery space is very hot right now, and there's a lot of significant projects being announced, and I think that trend is going to continue.
Jordan, Jordan, how do you think about the? Oh, sorry. Go ahead.
No, sorry. You go.
Jordan, how do you think about the time horizon for the battery recycling? Because I agree. So many batteries out on the roadways. but ultimately they will be swapped out at some point, but they still have some viability and some value to deliver. What's the catalyst for that, and is there an inflection point? Because we're X number of years out from the Roadster being out there. When do we see enough batteries being recycled that we can get some real test cases?
I don't know. We've been trying to figure out the answer to that for like 3 years, so I have no idea, honestly. And some of the projects that we're seeing come through from startups that have been tackling this issue, are coming in at project prices that, in our opinion, are too high to make it work. Because if you're trying to pitch a Microsoft or an Amazon that you've got this great reuse of a prior BEV battery, and there's a life cycle emission savings attached to it. There's other benefits, and then cost has to be the main one, because if you're a risk averse large enterprise customer, why would you take a battery that's at 85 or 90% versus just going with a Fluence or some developer that's going to give you a brand new set of modules? And unfortunately, the issue for us is that so far it seems like a lot of these projects are kind of pilot lighthouse projects. We're not yet at the point where a developer of a reused battery is able to say very cleanly, like, I'm saving you 35% versus a Siemens bid for the same project, because I've secured enough of these modules on the cheap, and we've kind of sorted out our balance of plant and everything. So I don't know. It's not like quite there yet for us, at least, to make an investment, but we're tracking it closely. We would really love to do something in the space.
Exciting.
Hop in.
Oh, Cody, did we lose you?
Max, did you want to hop in?
Sorry, it froze there for a second. I would say, Geordan, I'll have to connect you offline with the second life battery and the EV stuff. With guys is there that I know there's things folks that rely on, and Moment Energy that have been building around the space that I'm trying to wrap my head around. I think it's an enormous category, but one of timing and like actual skill to get there. I don't think we can wrap my head around internally.
Yep, sorry. Connection's a little bit spotty here, right? I think we got most of that.
Okay, so Max, you said headline. Geordan, you opened with the overhype, and again on a roundtable, I still have to pose the question: AI, and the question of kind of energy mixing for the future. I know that we discussed nuclear, and there have been headlines recently. So where do we see 5 to 10 years? Do we see net positive, net negative, the impact on climate? Are we going to see big changes in that time as well? And just in general, in terms of climate and maybe specifically energy moving forward? I know we just got finished discussing kind of the EV market, but then also, Geordan, you discussed also kind of the transmission distribution side. So I'd love to pose that question now on what we kind of see the future there for the next 5 to 10 years.
I guess what from my perspective, what I'm sort of hoping happens is, NVIDIA's stock price stays high enough that all the hype, continues for the next couple of years, and there's just a massive overbuild out in DERs and grid interconnection capacity, because I think that's really what you need for the energy transition. Whether AI is the long-term load that everybody's forecasting, I have no idea. I'm not at all smart enough to make a forecast or a call on what's going to happen in that space. But what would be great is if you get the permitting reform, the development pipelines, and the actual capacity installed on the grid, because then whatever happens, whether AI load center growth stays the same or it goes way down because all this capex spending was all for naught, and everybody was spending way more than they ought to have been. You end up with a whole bunch of clean and hopefully firm capacity, because everybody's massively overbuilt for batteries, for solar, for wind, for nuclear, and then for the actual transmission and distribution capacity. And that's sort of what mirrors what happened, I think, in the build out of the internet, like with all the telcos massively investing in broadband infrastructure and everything ahead of kind of the dot-com bust. Ultimately, what you ended up with was better prices for consumers for these services. And I think if we end up with a whole bunch of low-priced DERs that are clean and ultimately, firm through the use of virtual power plant software, et cetera, that's kind of a best case scenario. So I think there's a lot of from certain camps in the energy transition debate, a lot of people saying, hey, we need to pump the brakes on data center load growth, because unless we can guarantee that the power that we're generating to serve that load is clean, then we shouldn't do it. And I think that's kind of the wrong impulse. It makes sense because we don't want a whole bunch of combined cycle plants, which is kind of what's happening, going up. But ultimately, I think it's going to pull through a ton of clean energy development capacity, which is a net positive. That's my 2 cents.
I believe the energy demands will spur some distributed energy resource development, get more DRs in place. The feedback that I'm hearing from folks who are close to these new data center build outs is that the companies they really need the energy supply today, and they certainly won't wait around for nuclear development. They'd love it if it could be clean energy source, but ultimately there's such an arms race into who can deliver the cloud and data solutions for AI, that they're paying a premium right now to get the energy sources that they need, and they're less. They have a priority to make them sustainable, but that's kind of second to the priority of we need the energy either way. So there's whatever load growth comes, ideally it spurs DR investment. We'd love to see that. It's tough when building a 300 megawatt campus. There's been some talk about gigawatt campuses, data centers being built. Getting direct energy sources to those locations, it's challenging. And so this will not just be a co-location solve. It won't just be a nuclear solve. Hopefully there's efficiencies achieved within these data centers. The feedback I'm hearing is that 10% more efficiency, that just means we can run that much more compute. So there's a bit of a tension between supporting the build out of the digital infrastructure, keeping the sustainability mandates, and keeping the grid in a stable, predictable place. So I guess I'm seeing a lot of tension in at least the next 5 years as growth is being chased, but the infrastructure is not quite there for it. So solutions on procurement, interconnection, development. How can we accelerate clean energy, renewables development, interconnection, get our grid flowing more efficiently? That'll be really important to supporting that load growth with clean energy solutions. But that relies on regulatory folks picking things up and accelerating the process on their end. I think will be challenging.
Yeah, I completely echo all those points. The only thing I'd add from our side too is, feel like, obviously nuclear caught a lot of headlines for very good reasons in the last few weeks. I think, it's a vitamin. I don't necessarily think it's the silver bullet that's going to solve the issue here. I think that people all of a sudden got very excited very quickly, and not say it's not going to be a large piece of the driver, but to get these facilities online, to train the workforce to actually work at them, that a lot of them hit a point of retirement or aged out. There's going to be some time that comes on there. So I think that's one category. And then kind of on the AI side and kind of connectivity, the interconnection side. I mean, look, a lot of these distributed resources are going to start to come online, kind of the connectivity, have them talk to each other, whether it's on the API side or basically the grid balancing side. We're excited about that. We think there's huge possibilities within there. And the other category I think too is obviously within the built environment, we've seen people trying to do kind of the energy audits, kind of the decarbonization of the building. The building owners, they want this, but it comes at a dollar cost. Is it increase? Does it help their top line? Or does it become a cost center to them? So I think that's one of the things that we have to think about is the economics around that a little bit as well.
Yeah. And I think there's great excitement around using generative AI to design better systems, better energy infrastructure, better materials, better ways for buildings. And I am aligned with that optimism. I'm looking to see companies who's actually putting it into practice. We're seeing it some on drug discovery of, can we do some advanced modeling and identify, all right, what out of the 100 next drugs we could go test, what are the 5 to 10 that are most promising, so we can focus and prioritize. Can we do that with materials? Can we make vehicles that are 10 times lighter? Okay, the batteries now are 10 times more effective. So I'm curious, are you all seeing any companies out there actually getting to that next phase of, we're designing materials, we're designing systems using this, and we're finding them to be advantaged?
Yeah, it's a category where it's on the drug discovery side. That's kind of what sparked our interest into looking into the space. And I think there's like a handful of them. I think Google was at one time was trying this as well. And there's companies even called Materials Nexus out of the UK that's also kind of going after this. And it's like, one, run the model to figure out what are the alternative, to the rare earth materials, and two, what's the feasibility to actually go live, and what does that process timeline look and take like to get to the scale. I think the question is the manufacturing side is working with a partner to actually get this live, to whether to go into a wind turbine, to go into an EV battery, to go into onto the utility side. But I think it's an area that, like, in the next couple of years, there'll definitely be do I think it's a winner take all market? I'm not sure. I think there's probably a few that actually play very well in this space that can like license out what they do to other players, whether across industries, whether it's in the climate space, not in the climate space. But basically, we have a shortage of certain materials, and some are depleting. Some are, the prices are kind of skyrocketing. So I think it's an area that we're excited about. Started to see a few players pop up, but I think it's like the flip to, all right, commercialization now. It's like, all right, if we've identified one material, what does it take? Is it 10 million? Is it 15 million? Is it 50 million to actually start to, get with like the right players now at the door?
Yeah, I think that's a great point. Like, we're sort of back to the beginning of the discussion in a way, because I think there's, I am less informed on the AI-driven materials discovery. That's not a space I've spent a ton of time, but one of the areas that we have spent a little bit more time is on AI-informed siting and location for whether it's, novel geothermal, or highest propensity to get through an environmental review without getting hung up for 6 months in an interconnection process, like those types of applications for AI. But again, it comes back to go-to-market and monetization, because you can develop a really great software tool or API to help the developer avoid risk, or find a better site, find better bankability than they otherwise would have with conventional engineering models, those types of things. But then actually capturing that value as a data startup in this market, where so much of the value is captured by the Nextera or the developer themselves, and the value stack going to that sort of site discovery is so thin. That's been the challenge for us in terms of like trying to find those kind of generative or AI driven solutions, in the electrification space. But then I don't know what it looks like in materials, and there's maybe some analogs from the drug discovery side that apply, directly to climate, just in terms of like monetization models and everything. I don't know.
I think you're hitting on a challenge, Geordan, of building, a feature or building a product versus, building an entire business. What's a whole standalone company with a product and a brand that can service enough customers to justify the revenue, right? Create a great return for it, entrepreneurs, founders, team, and investors. There are ways to accelerate different parts of the value chain. They may not be venture-like investments when we think about risk and return, which I think goes back to the importance of working with strategic partners for early stage entrepreneurs out there, doing that customer discovery and finding the right partner. The corporates can be really effective if you have the right one. Incumbents can be really effective, corporate venture capital or strategic investors. This space is so complicated and barriers to entry so high and adoption cycle so long that it helps to have not just institutional cap table in the mix there. But the mission's so great, which is why we keep doing it despite those challenges. But it requires more nuance than B2B SaaS.
Yeah, you touched on a couple great pieces there. Like, if you look at a lot of the big exits in climate, it's, fully integrated development platforms being acquired by, the even larger development platforms like Nextera or Brookfield. And it's, the outcomes for true venture tech startups, but quite a bit different than they do in like B2B SaaS or in AI and in the healthcare space as well. And it's just it's sort of a feature of our space that a lot of what gets developed and produced, requires picks and shovels and people in the field installing real stuff into the ground. And that's just a bit of a different business model. But I think for companies that find that right balance of integrating those other activities into their business model in a way that's capital efficient, you can get to really significant scale and great outcomes. You just have to be, I think, more strategic about what you're integrating and what parts of the value chain you're trying to capture yourself versus leaving outsourced. And I think some of the big failures in the past 12 months, like thinking about a company like Swell, they started out on, I think, the right track in terms of to scale VPPs, we have to have batteries installed, and right now that's a gap in the value chain, so we're going to tackle that ourselves. But then I think as they expanded, they were just bolting on a lot of different pieces to that platform in terms of like pure play software, acquiring solar installers, expanding too quickly across, I think, too many parts of the value chain, and ultimately, it didn't work out. And so I think there's lessons to be learned there, and companies that kind of navigate through those decisions in a really smart way will build, really valuable, profitable at scale businesses that will be, achieve venture scale outcomes. It's just going to look a little bit differently than your typical SaaS company, as you said, Blair.
The path looks different. I think what we're hitting on for folks in the audience who are company builders is that a high growth company in this space, the founding team, executive team, you got to be a great technologist. You have to be great at raising capital, different types of capital. So got to be a master of your balance sheet in a great way. Got to have to understand the go to market and selling motion and sales cycle of what you're doing. And then the pricing and that creates a viable business model. So you need experts in three really hard things to do to navigate that path to success. So when you think about your team construction, how are you all complementing each other in those ways? Where are you advantaged? Are you the incredible technologists, capital raisers, go-to-market experts? Where do you have your edge? How do you complement the skill set you have with the ones that you can get even stronger on? That's when I'm on the investor side of the table, I'm usually assessing those three things within the team.
So I want to hop in here because we have about 12 minutes left. I was going to ask the U.S. election question on kind of, where climate investing is in a more broad standpoint post-election, but with 12 minutes left, I'd rather focus on something else because we are a global community at the end of the day. We have in-person events in the major cities from, all around the world, LA, all the way down to Sao Paulo, back up to New York, Popping the Pond, London, us here in Zurich, all the way out to Jakarta, Dubai, you name it, in 45 cities. What's your best advice for, because we've been talking about founders a little bit towards the end of this discussion here. What's your best advice for founders that are looking to enter the US market, right? And how can they find you? What's the best way for them to start that deal flow, setting up shop? Are there specific markets that you're super interested in, that you're seeing really strong technology come out of that match your investment strategy? Our events are recorded, so then, it's for me, it's almost 9 o'clock here in the evening. Most of our people in Asia are probably asleep right now, but we'll definitely be posting this live. And especially, I'm interested to hear, because I'll do a compare and contrast a little bit, because we have our European VC Roundtable on November 20th. Love to see you all there. So I also want to hear, I want to ask Steve what North America thinks about the rest of the world. And then on the 20th, I'm also going to ask Europe what they think about the rest of the world, especially North America.
Yeah, happy to kick it off. I mean, I think that's a great question. And like, look, from our perspective, like obviously like climate, this is a global issue and people are tackling very similar business models all over the world. So I think what you guys are doing on creating the kind of community side, like kind of the shared learned lessons is actually critical. I think, why it worked, why it didn't work. The other thing too is just like, as you look to like scale, like kind of building out your network in different markets. Like if you're going to try to come to the US, sometimes, the go-to-market playbook in Europe isn't the same as the US because, we have different regulatory environments. We have different, blockers, different kind of, while there might be the same kind of corporation or partner, it actually might look different than the playbook here. So kind of building those relations early and making sure you kind of have the right perspective. And then to your point of like, what do we think about the rest of the world? I think, parts of the world are doing fantastic. I think Europe actually, in some senses, actually ahead of the US in many ways. I think we're actually taking a lot of shared lessons on the electrification and kind of the carbon markets and across the board from the playbooks and kind of players that have gotten to scale over there. So I think, we have a lot to learn. I think it's a global effort to get there. But I think there's definitely, I think I'm personally, we view very highly of Europe and kind of the market as a whole.
Yeah, I would add, just going back to a theme that, Blair and Max have both brought up a couple times, just choosing your partners. Because I think we've talked a lot about electrification, so just staying there for the time being. Startups in Europe or Asia, the large industrials, whether it's ABB or Marubeni or General Electric, Schneider, these are global companies that have massive footprints in Europe, in Asia, in North America, and so for us, we've seen many startups, start globally in another country, but have a pilot project or some sort of commercial relationship with one of the large industrials in that market, and then that is able to be ported over to the North American market by being, just very strategic about who you're working with and what those initial deployments look like, because it can be a really great way to de-risk. If you're a UK company, and you've got a deployment with National Grid in the UK, for instance, we've seen that crosstalk on both sides of the Atlantic. So I think the auto OEMs are a whole other beast. There's a company called EV.energy that is doing EV program management for EV drivers and utilities. They started in the UK, lots of great OEM partners, and they really leveraged that to build a great footprint in the US when they expanded here 2-3 years ago. So I think the playbooks are out there, and a lot of it just comes down to really focused and smart go-to-market and choosing your partners wisely, I think.
Agreed. Finding that connective tissue from your existing market into the new one, whether you're going US abroad or abroad US. Yeah, where's the through line in the relationship and the trust that you've built and what you've proven. Additionally, as you're thinking about US investors, take your time to do your research on their thesis and what kind of risk they like to take, what kind of technologies they like to back. We can think of firms who take a lot of technology risk with a 20-year time horizon. That's very different from a firm who's got there must be a software component in this and you must be ready for commercialization. Minority investors versus majority, institutional versus corporate. Take some time to understand the landscape and know your audience, if I could put it simply. Really know your audience when you're trying to build these relationships. Go deep instead of going wide, because reaching out to hundreds of folks when very few are in scope, you'll be lost in the noise. Making a concerted effort to reach a particular firm, individual, investment team, innovation center within a corporate partner, that's where you'll get the most reward. So don't go wide, go deep, know your audience.
That's a really good point. I want to tack onto that too as well. Do some research around who the LPs in a given fund are, because what we're seeing a lot of now is a lot of these industrial LPs are making commitments to funds that are operating in both, Europe and North America, or Asia and North America, with a specific view of helping to solve this exact problem. And you're much more likely to have success raising from a venture capitalist that has taken LP money where there is, some sort of mandate like that attached to it. And the LP wants to see the VC deploying capital in North America as well as Europe, or as well as in Asia Pacific, or the Global South. So those types of strategic choices as you're deciding who to invest your time with when picking a potential VC investor is super important.
Yeah, building on both those are couldn't agree more. I think the one thing we always tell founders too is hey, if you get to that final point where you have the opportunity to invest with a certain fund, ask to connect with some of their portfolio companies, see what their experience was like. Would they work with them again is usually a telling sign. Pros, cons, then do your own research. If their portfolio is listed online, try reaching out, not every company in the portfolio, but maybe a handful that are very specific that could have overlapping customer introductions with you, where you're building it towards. See how valuable that is. I think it's something not everyone does, but I think it's actually critical for kind of building that long-term partnership and creating transparency up front.
Yeah, that's really good advice.
Blair, Geordan, Max, I want to thank you. I'm not going to end the call just yet. I'm going to give you a time to think, because with 4WARD, we always want to find tangible results at the end of the day that happen, not just another speaking engagement or raising a round. We want to see things and people connecting and doing together. So I'm going to have you both, all three of you, and with an ask offer, but to give you a second to think about it. It could be anything, you professionally, personally, representing your funds, whatever it might be. But I'm going to do a plug first so you could think about it, so I don't put you on the spot. Real quick, 4WARD, we have plenty of events happening. As I mentioned, we have our European VC Roundtable November 20th. We have our new member call tomorrow. We hold events in 45 major cities. So on the platform, you can go find the different cities and join them, their WhatsApp groups and the city groups on the platform. And to stay constant and current with everything, make sure you download the Circle app so you can get push notifications on events like these happening. And I'm going to turn it back over to you three gentlemen after I did that plug, and let you wrap us up here with something that can help the community.
What are you looking for exactly? Sorry.
Whatever it might be, an ask offer. Again, we have plenty of stakeholders. So, right, the ask could be specific to technologies, wanting to connect with founders, entrepreneurs. The offer could be personal advice, coffee chat. It could be specific to your investment strategy. It's a wide range, because we have people looking for jobs. We have founders raising. We have corporates, academic researchers that may want to have a spinoff. So keep it pretty wide, whatever kind of speaks to your heart, and the idea of community and all of us working together globally to solve this problem.
Well, quick plug for Denver Angels. If you're an early stage company thinking about future financing, if you're generating revenue, if you're solving the climate crisis in a meaningful way, and if you're serving commercial customers, so typically B2B is our focus, would love to connect. Please shoot me a note on LinkedIn. Would love to learn more about what you're building. If it's a fit for us, fantastic. If it's an opportunity where we're most effective in sharing feedback on what you're doing, I'm always happy to give that time as well. Share a little POV on the fundraising strategy, how you can think about that blended capital stack I mentioned, and if I can connect you with innovative companies, energy providers in Colorado that are looking to shake things up too, I'm happy to make those introductions.
Cool. Yeah, I think mine would probably be along the same lines. If you've got a really interesting startup that you're building, and you are looking for investment, keep us in mind. We're Series A fund, like I said, usually writing $2 to $6 million checks. And I'm also always interested in hot takes on, the major topic of the day. So hot takes on data center load growth. That's one that we're thinking about a lot right now. And also this issue of EV battery reuse. If you're out there building a company in that space, it's a topic our team is spending a lot of time thinking about and discussing right now. So those would be my two.
Awesome. Well, in addition to any great companies at the seed and Series A stage, we'd love to talk with them. I think the ask from my side, if you guys, or if you or anyone in your network is like an advisor or an expert in a certain field, always looking to kind of build out our network there, whether it's for diligence or kind of helping companies within the existing portfolio. We'd love to kind of connect with them and kind of learn more their insights. And the offer is try to hold office hours like bi-weekly, and so you can find me on LinkedIn. Please drop me a note and we'll set some time up. Happy to talk through fundraising strategy. See where just give some honest feedback one-on-one if that's of interest to folks.
Max, Geordan, Blair, I appreciate your time. Thank you so much to everyone on the platform, on part of our 4WARD community. You could reach out to them directly. You just have to go into our member search and you'll be able to connect with them. I want to thank all three of you for joining today and thank everyone in the audience for joining. And I hope everyone has a great day or evening wherever you are in the world.
Thanks a lot.
Awesome.
Thanks, Cody. Thanks, Geordan. Thanks, Max.
See you guys.